Thanks everyone for joining. I'm really excited to get to talk to the whole Savvy Ladies crew today about credit cards, which saying out loud sounds kind of nerdy, but it's true. And I think that I'm most excited to talk about this stuff with everyone because I think obviously everyone's consuming so much content over the last few weeks, and I'm sure within the next immediate future of ours, reading a lot of news, basically trying to figure out like how to make the most of what everyone's going through right now. We just happen to think that this is a really good opportunity to get smart about a lot of things in your personal finance life, especially since things are changing so rapidly and you may have to be confronted with things that you've never thought about before. And so we think this is a really good opportunity to get smarter about stuff like credit cards. And I think the reason being is that there's so much new stuff that you're dealing with, like understanding what a stimulus check is or a small business loan if you're a business owner. But we think one of the things that's going to stick around forever and has also been around forever is credit cards. And, you know, I would venture a guess to say that every single person on this call has at least one credit card in their wallet, probably more. And oftentimes credit cards, you know, with the exception of, let's say, you know, checking accounts are usually one of the only relationships that people have with a financial institution, or at least the very first of those relationships that you have with a bank. So there's a lot of new things that come with signing up for a credit card. And I think the reason that it's so important now is that this is a really good time for you to get educated on all of the stuff that you didn't really educate yourself on the first time around when you were signing up for credit cards. And especially as credit cards become a bigger part of your life, you know, you may not have as much income coming in. You want to be really smart about how you're using them. And so I wanted to take the time to go through, you know, some of the important things to know about credit cards specific to what's happening around coronavirus and how you might use them and how you might interact with them during this time. But really, I think the best part about this is that all of this information is stuff that's going to stick around for a really long time. So you're educating yourself now, potentially for a more urgent matter, but you definitely are going to be able to take anything that you learned here and apply it down the line for many, many years to come. So the first thing that I wanted to touch base on was what, you know, how does coronavirus and COVID really affect what's happening with your credit cards and the things you need to be paying attention to that may change right now versus what they always have been. So I wanted to start talking about interest rates here. And I think, you know, everyone has a pretty good handle on what the fees of credit cards are, because that's usually one of the first things that you think about when you're signing up for a credit card. You know, there are definitely hidden fees, not so hidden because they're all disclosed, but fees for like cash advances or balance transfers. Everyone's pretty familiar with their annual fee because that's sort of one of the first things you're confronted with when you're signing up for a credit card. And people usually sort of come to an understanding about how they want to deal with that fee or if that's something that they can handle on an annual basis. So I didn't really want to talk about that too much because that doesn't change as much, but I did want to talk about interest rates because this probably wasn't something that you thought about, you know, so closely when you were signing up for your new credit card, because you probably just thought you were going to be totally perfect and never carry a balance, which is, you know, some people's thoughts. They're going to be so good about using their cards. But your financial situation may have changed, and understanding how interest rates work on your credit cards is super, super important, especially if you find yourself not being able to pay your bills in full, like you may have been able to previous to what's going on right now. And the reason that interest rates are so important when it comes to credit cards is that they are some of the highest interest rates of any financial product that you will interact with over your lifetime. So you may be used to seeing like single digit interest rates on things like car loans or something, for example, but they get really aggressive in credit cards and they can go into the 20% range. So first I wanted to make sure we explained how they actually work, and then we could talk about how they've changed during a crisis like the one that we're in now. So, you know, a lot of the information is right on the slide for you guys to take down and save, but what you want to know about a credit card interest rate, they're called APRs, annual percentage rates. And this is the amount that you're essentially paying to the credit card issuer when you're carrying a balance from month to month. So what I like to say is, like, let's use a really easy formula. When you are carrying a balance, let's say of $1,000 on your credit card, and let's say you have an interest rate of 21.99%. So what you do there is you say, okay, I have this balance of $1,000 this day. You multiply that by the annual percentage rate that you have, and then you divide that number by 365, because this is actually a daily rate. So that number turns out to be around 60 cents. And what happens is that number, 60 cents, gets added to your balance, and that gets carried on to the next day. And then you repeat that same exact formula the next day, except now you're doing it, instead of with $1,000, you're doing it with $1,000.60. So every single day you don't pay off your balance, you're accruing that interest, which is compound interest, which may be something that you've heard about with checking accounts or savings accounts or high yield savings accounts, which is usually a really good thing in those scenarios, but not so great when you're carrying a balance on your credit card. And the main one that most people sort of come in contact with are your purchase APR. So that's really the interest rate that you have based on any balances that you're carrying based on things that you've bought during the month. There are totally different APRs based on different types of things on your credit cards. The three main ones are purchases, like we just discussed, balance transfers, so if you're moving a balance from one credit card to another, and if you are taking a cash advance on your card is another one, and there's also some penalty APRs that come with it. And they all are different rates, so when you're looking at your card holder agreement, you want to take a look at what's the difference in all of those APRs. So when you're going to interact with your credit card in each different way, you know what interest rate to accrue to understand, okay, if I'm not paying it off in this time frame, this is what I'm going to ultimately end up owing. Now, what's happening right now, and what happens a lot of the times as the years and days progress, is APRs can be changing. So what happens is the government, so you may have been hearing a lot about this in the beginning of the economic crisis that had started with coronavirus, was the Fed decided to lower interest rates. And really how this trickles downstream is by saying, the Fed is saying, okay, banks, we're going to make it easier for you to lend out money to consumers. And the Fed, if they decide to incentivize lending like they are right now, what will happen is they're putting less of a burden on your bank to keep more money, for them, and they can lend it out more easily. So what tends to happen is that banks tend to really give you a break on that interest over time. They definitely don't have to. It's totally up to them what they end up doing with their own financial products that they send out to the public. But usually what happens is the interest rates that they charge on financial products like credit cards tends to go down when the government decides to give them a break on how much money they have to keep on hand. Now, your APRs just won't change as the Fed changes their interest rates, but this is a really good opportunity for you to go to your bank or your credit card issuer and call them and negotiate a lower interest rate, especially if you find yourself in a situation where those interest rates can be really overwhelming for you and a real obstacle in you paying your bills back. So what you want to do is give them a call and say, like, I know interest rates have lowered. You're able to see this, especially, if a bank is offering new cardholders certain interest rates that are different than your own, or competitors are offering lower interest rates. It's a good option and a good opportunity right now to call your issuers, explain to them what's going on in your personal life, and they are more often than not pretty understanding about changing those interest rates over time. And that is exactly what a lot of people are doing right now. Another thing that is happening is many credit card issuers are actually offering options to their customers to get, payment relief. So giving you a break on the payments that you owe during the time and deferring them to a later time frame. And also offering some waived fees as well. So in addition to being able to negotiate with those interest rates, you may be able to defer those payments to a different time so you don't incur those interest rates at all. It's very, very important that you talk to your issuer, before just assuming anything is going to happen, and get any commitments that they make to you written down in writing, so you can have that, for a later date if you ever need to have a dispute or discuss what's going on or have a better understanding of what you actually owe. So you definitely want everything in writing. And then you also want to make sure you understand what doing things like deferrals or forbearance means for your credit report. So if they are deferring your payments, are they communicating that to the credit bureaus? Are they not showing that as late payments on your credit reports? You want to make sure that even if they're giving you the opportunity to, see some relief from payment or high interest rates, that your credit report is also reflecting that, and you're not going to be negatively impacted as time goes on. And so we wanted to share with you guys one of these really helpful charts that we have on the balance that one of our wonderful writers, Sienna, put together, that actually outlines the major credit card issuers that are out there in the world. And I'll leave this guy up for a couple minutes, and you can always refer back to it if you look at the webinar on the website. But these are the major things that most of the credit card issuers are offering. So you can expect from what we've contacted all of these guys to get information on that most of these credit card issuers are definitely offering some sort of payment deferral. A lot of them are offering waived fees, some even offering credit line increases if you find yourself having to rely on your credit card more than you had before. But we still suggest that the best option for you is to always contact them. The people that work at your credit card issuers are humans too, and they are really willing to work with their current customers on coming to agreements that help them pay their bills and maintain a good credit history. And especially during this uncertain time, the banks want to make sure that they're able to keep their business under control as well. So if you contact them and work out a good negotiation, it's totally possible. And like I said, just make sure to get everything that you get from them in writing so you have a record of that stuff moving forward. But it's certainly good to always ask for help, even if you don't think it's something that your bank would have initially offered. People are doing a lot of different things nowadays, so make sure you give them a call. And a lot of people we find are trying to figure out if they can actually get a new credit card right now. An initial instinct, credit cards are a very easy way to get access to cash quickly, especially if you are unable to have a new income. You need access to cash. You're staying at home. You need to purchase food and necessities. And so a lot of people are trying to decide if they can purchase new credit cards, or not purchase new credit, sign up for new credit cards. And there's a few things that you should know. So banks are obviously very overwhelmed right now with the amount of customers that they are trying to service. So they have a lot of work to do with the current customers that they have. So they're all trying to cope and figure out how to deal with this crazy scenario the same way that we are. And they are definitely focusing on servicing the existing customers that they have. So you may find that credit card issuers are limiting the amount of new applications that they are taking, or making a little bit harder for you to sign up for a new card. And that's mostly one, like I said, they're really trying to service the existing customers that they have and make sure all of the money that are on their balance sheets is accounted for, and they know how to deal with what's happening with their current customers. And also, this is an uncertain world, right? So people that are out in the market who have constantly changing financial situations pose a greater risk to these credit card companies. So if you may have a lower credit score, it might be a little bit more challenging to get a new card at this time. But if you do have, very good to excellent credit, there really shouldn't be much of a hurdle to signing up for a new card. And like I said, maybe a good opportunity to take advantage of lower interest rates that people are seeing right now. So definitely, give them a call, but try to understand, what is your current situation? Are you a good potential customer for this card company? And really review the options that are out there in the marketplace for you to get one. All right, and I think one of those keys to doing that is the first step in any process of signing up for a new credit card, which is understanding your credit score. So like I said, if you have very good to excellent credit, you're almost always an ideal candidate for a bank or a card issuer to give you a new credit card. Lower credit card holders are sometimes what they consider more risky. So you want to understand all of the things that impact your credit score so you're able to take advantage of improving that number and becoming more of that ideal customer for a bank down the line. So we wanted to give you the look into the 5 factors that influence what your credit score is. And I think a lot of people aren't actually aware of what these are, or sort of the percentage that they take up of your credit report. And there's a lot of confusion about, like, you know, what is good. We conducted a survey at the Balance where 25% of affluent millennials, so these are people that even are making more than average incomes, believe that carrying a balance on your credit card is good, which is just really not the truth. So understanding all of these factors is very important for you to have success. So the number one thing that affects your credit score is your payment history. That accounts for 35% of your credit score. And really, this is so simple. It's just, do you pay your bills on time? A credit card issuer wants to know that you are going to be reliable and pay what you owe them every single month. And this is definitely the biggest factor. And this can go back, 7 to 10 years in some case, and shows how you're paying off your bills over time to all of your different creditors. The next one is debt level, and this accounts for 30%. So right after payment history, what people are looking at is what we like to call like credit utilization. So this means how much credit is out in your name. So if you have multiple credit cards, let's say you have 5 credit cards with $10,000 balances on each credit card, you've got $50,000 of credit out in your name. What they want to see is, like, how much of that credit are you actually using? So let's say if you only have $5,000 in balances, or what you have used on those credit cards, you have a pretty good credit utilization ratio. And future lenders really want to see, okay, a lot of people have been willing to give you money and you really only owe a small portion of that money, and that makes you a very attractive customer for a bank or issuer. The next thing that people are looking at is, how old is your credit history? So are you a brand new credit card holder? This is a lot of times what you hear, like college students often going back and forth about, or people who've never had credit cards before. This affects a lot of people that are, immigrants from other countries who haven't been able to bring their credit history over. Banks and lenders really want to see that you have had a good history over time with creditors. So anyone can be a great, customer for a couple of months. They want to see if you're a great customer for years. So they're willing to really offer you better terms, more credit, and have a better relationship with you in the long term, to offer you different products and really expand their relationship with you if you are able to maintain a really strong history with people over time. The next is how many different types of credit you have on credit reports. So we're getting into sort of a smaller portion of what that credit score means, but a lot of credit card and banks in general want to understand if you have different types of, loans on your report. So credit cards are one part, personal loans, mortgages, they all sort of impact how many different kinds of credit you're extended to. And I think the more varied types of credit you have is more attractive, because they know that you're sort of a good customer in many different parts of your life. And it indicates that you just have a lot of experience dealing with all these different types of credit, so they feel a little bit more confident offering you that money. And then the final part is credit inquiries. So I think most people may be familiar with this part of your credit score, and I think a lot of times people tend to inflate how much this impacts their credit, because they think this is the one thing they know all the time. But really, every time you're submitting an application for a new credit card or a loan, any credit inquiry that is placed on your report is 10% of what that overall credit score is. So every time you submit that application, there's a hard pull on your credit, and it's just trying to see, like, are you worth it to have a customer? And I think what banks and lenders look for is saying, how often are you doing this? Are you trying to get new credit all the time? That may be a red flag for them in terms of, like, why are you, trying to extend? Why are you trying to get all of this credit? And especially if you're not actually acquiring their credit, it may be a concern of theirs as well. So these are really the main factors. So it's important to understand, like, when you're doing each of these things. So paying your credit cards, getting new credit cards, closing old credit cards, how do they affect your overall credit score? And you want to keep that as high as possible, especially if you find that you're going to need different or more credit cards down the line. And a common misconception that we see is just understanding the difference between what a credit score is versus what a credit report is. So the credit score, like we were previously discussing, is really just a number of what your credit is. And that ranges from 300 to 850. And it essentially just tells a lender what your credit worthiness is, like how good of a potential customer are you going to be. And that credit report is actually that detailed, almost like itemized information list of everything that is on your credit report, all of the things that we talked about. So your payment history, your account history and length, your credit inquiry history, the different types of credits you have. It's sort of like a history of your life in terms of your money, besides your bank accounts. So you're able to really get a sense of like all of the things that are impacting your credit score. And becoming familiar with your credit report is super helpful to understand like what is impacting that score. I think we say this a lot of times when we're talking about creating a budget, where it's like you should totally look at all of your financial statements to understand exactly what are you spending your money on. Most people have no idea what's actually impacting their credit score. They just see the number. Getting familiar with what's on your credit report is very, very important, because oftentimes you may find things that are not accurate, things that you're totally unfamiliar with, and you have an opportunity to go back to your banks and lenders and correct that information and potentially improve your credit score in a pretty like easy manner. So the things that you want to be familiar with are, the types of scores and reports that are out there. The scores are two things. They come from FICO or Vantage scores. And really what those numbers are saying is like they're the ones that are determining if the numbers between 300 and 850 are good, fair, poor, excellent, very good. Banks and lenders decides, which ones they like to use the most to make their judgment calls. They each sort of have their own factors in determining what they think is good, fair, excellent. And really your lenders are deciding, okay, like what are the things that matter to me most? Which score matters to me most? Which one do I rely on to be the most accurate representation of how good a customer may be? And then the reports, which is what you need to be familiar with, come from a few major credit bureaus. So you have the three majors are Experian, TransUnion, and Equifax. And they are who provides those reports to you and your lenders. So becoming familiar with them is really, really important. And honestly, federal law allows you to get one of these free every single year. You can go to annualcreditreport.com. But it's become so commonplace for this to be something that, banks want to offer their customers that you can almost always go onto your bank or credit card website and get access to one of these reports and your scores on there as well. So, you want to make sure you're getting really familiar, like we said, to pinpoint where you're weak and where you may have opportunities to improve your reports, your credit score over time. So this concludes our sort of getting familiar with what your credit is and how you can do that. And really what we wanted to go into next is how you may decide to use your credit card, especially during times like this, to finance different purchases. So you may have less incoming cash or cash flow in your home, and really you want to understand like, what can I use my credit card on? And so really what we want to keep stressing, which is something that is specific for now, but also any time of the year, is really when you're using your credit card to be very thoughtful about how you're using that card. So you really want to make sure that you're only purchasing things that you feel comfortable paying off over the month. And also, if you're able to have that discussion on payment relief or fee relief with your banks or lenders, that your plan incorporates what those things are, and you're really not outspending your means. Because we don't want people to be exposed to these high interest rates and potential penalties and impact to their credit reports, you want to have a plan of how you're going to use your credit cards. But using them during a time like this is really, really important. You want to be able to use things like a cashback credit card. You may be shopping at the grocery store more often. If you're able to pay your balances off and not really incur those interest charges, this is a great opportunity for you to gain some extra cash while you're making purchases that you sort of may not have been making in the past. So understanding what are all the balances and benefits of using a certain kind of credit card for those purchases is going to be really important, and making sure that you can pay those balances off in full, or at least have a plan with your issuer to pay them. But definitely being able to use the cards to their benefit, especially, let's say, cashback cards that give you points on everyday purchases, maybe not travel cards as much right now, things that you're able to take advantage of as much as you possibly can. And one of the things that has led to, like we said, people have, potentially less cash in their household. So we've been seeing on the balance a lot of interest in getting cash advances, or being able to use cash against your credit card. So cash advances are options on many, many credit cards. And it's essentially like you're borrowing cash against your credit limit. You're almost like withdrawing money from an ATM, but it's from your credit card. And this is, like I said, an option on many credit cards, so you should definitely know if this is available to you. But the things that you have to be very aware of are there are fees and interest rates on a lot of this information on these options. So you really want to be sure that that is actually the best way to use your cash advance option on your card. Cash advance APRs are usually higher than your normal APRs, so you may have to pay a fee and a higher interest rates on your card. So we suggest evaluating if this is a good option for you and your family. But there's definitely other ways to get cash out of your card without using the cash advance feature. So a couple of the things that we've found are you are able to buy prepaid gift cards and then potentially sell it online for cash, which is something that a lot of people do if they have specific affinities for certain stores. You also are able to, work with friends. I've definitely done this. I mean, this was totally a big trick in college that you would do when you would have a friend or family member who's, wants to make a purchase in cash. You could potentially make that purchase for them on your card, and they can give you the cash in return. So that's a good way to make sure you're still having cash on hand. Definitely one that I have partaken in myself when I had no money in college. So very familiar with this process. And I think it's good to do. And I would just say, be aware if you're trying to use a paid, person-to-person payment app, they may have rules against how you're doing this. So make sure you're getting familiar with all those rules, but you are able to do this, on a person-to-person level. And then I would say another thing that you can do is just understand like things that you would normally pay for with cash that you can actually start putting on your credit card. You want to do that so you can free up the cash that you have for more, important and urgent needs. So you can have, that cash on hand and also potentially gain the benefits of making that purchase on your credit card. Let's say if there's sort of a rewards component or cashback component to what you're doing. And this really is helpful, especially if you have a credit card with, no interest introductory offers that allows you to, accrue balances without having to pay as much back on those over time. And one more thing we wanted to think about, one of the knee-jerk reactions that we've seen a lot of people, interested in taking are closing your credit card. So as you're, trying to understand how to manage your budgets over time, you want to say, should I close the cards I'm not using so I'm not tempted to use them and I don't accrue any additional balances that I have to, pay off? And really what we think is, unless you have a card that's, let's say, a retail card that you got for a promotional offer at a store, and you've already paid off that balance, we suggest keeping those accounts open for as long as possible. Like we said, credit history is a really big part, 15% of what your overall credit score is. And so maintaining that long credit history with an account is really good. You're also able to add that extended credit to your credit utilization. So it keeps it looking like to your potential lenders that you have a lot of credit available to you that you're not using. So it makes you a much more attractive customer. So even if you're not using that specific card, I think it's a really good option for you to keep that card open. as long as you're able to control yourself from actually spending on that card in the future. And the next and final two things that we really wanted to talk about are balance transfers and debt consolidations. So these are the other two major things that we see as being a really big interest point for consumers as the economic crisis continues and people are really going to get a hold of what their financial situations are. So balance transfers are a good option if you are deciding what to do with like paying off some of that high interest debts that you've had on other credit cards. So you're able to get balance transfer cards if you're looking to really save interest on some of those bigger balances that you have and continue to use your credit cards over time. So, the best balance transfer cards that we think are out there have these extended, interest-free promotions and will definitely have reduced fees in many cases. And so it's a really good option for you to use if you are trying to make your life a little bit easier by putting everything on one card and giving yourself a little bit more breathing room. So what you really want to do is find one that you qualify for based on your credit score. Make sure it has very low to zero, introductory interest rates and definitely low interest rates over time. And there's a lot of options. You can do it on the balance, many places that you can search for this online. And really what you want to just be aware of are like, what are those fees? And then by completing the transaction, you really just have one bill to monitor, which you can, pay off in a much easier monthly payment cadence as opposed to paying off different bills with, varying different interest rates. So this is definitely a very attractive option for a lot of consumers out there. And a similar but very different option are things like debt consolidation loans. And so, these usually come with a fixed interest rate, which is different than a lot of balance transfer cards that are variable interest rates. Those rates can change over time. These comes with fixed interest rates, and so they have, they're a little bit less like flexible in what you're doing on them. So they may decide to do a lot of things like avoid you paying ahead of time to get all of those introductory rates. They may want you to pay it in a more, structured cadence. And there's a lot of things that you have to be aware of in terms of making sure if you're getting a secured loan that you may have to give that lender access to some of your other assets for them to take control of if you're actually not paying them off. And so there's a lot of things that we'd say are big watch outs when you're doing something like a debt consolidation, because there's so many ways that banks and lenders are trying to protect themselves from potentially, non-payment for consumers, especially during uncertain times like this, is that you want to understand sort of all of the potential pitfalls that you have for, paying this out. And these are the major things that we're thinking about. So like we said, good options for when you're trying to figure out how to balance everything during this crazy time is talking to your credit card issuers, seeing what your options are for interest and payment waves and, forbearance or deferrals, thinking about cash advances or different way to leverage cash off of your credit card, and then potentially, transferring balances or consolidating your debt over time. There's so many more things that you can do to make sure you are, using your credit cards to the best of your advantage during this time. So feel free to check us out on the balance. We have a few of our, super helpful articles right here for you to visit. But there's tons of content that we have that can help you guys navigate during this crazy time. And I think we're about out of time here. So thank you so much for joining the webinar. Feel free to check us out at the balance and recheck out the webinar on savvyladies.com.
Thanks, Lauren. Thanks, everybody.
Bye-bye.
Bye-bye.